Good morning, good afternoon, good evening, wherever you are, whenever you are. Welcome to a new Breakout Solutions live stream. I'm your host, Matt Batiri, here with you today for another Bitcoin technical analysis video. All right, so without further ado, let's get stuck in. Obviously, we've had an amazing week. Last week was an amazing week with Bitcoin absolutely skyrocketing. I'll tell you exactly 30% in 1 week. And over the course of the last 2 weeks, since we dropped down to 19,500, we've seen a 45% increase. So can this continue? Well, there's a few things in the media that I want you guys to be completely aware of. I saw a couple of things on YouTube the other day, which, it's room for concern. And why I want to bring this up is because some of the figures thrown out there are completely hysterical. So you got this person here saying $1 million Bitcoin price in 90 days. So when you see stuff like this and you're a retail investor, what it does, it makes retail investors FOMO in, build up a lot of liquidity in the market. And then you have the big, the big whale bears looking to short the market and sell off their positions. Because usually when you see such a extravagant rise, smart money, especially hedge funds that see a 10 to 15% return on each year as a good return, this is a phenomenal return for most investors. So smart money is going to be taking money out of the market now because we've had such a big rise. The big rise is going to cause retail investors to FOMO in, thinking, hey, Bitcoin is going to go to $1 million now. And yes, I do believe that Bitcoin over time will go $1 million. So if you're going to buy a Bitcoin today, you need to have the foresight of thinking of the long game, not the short-term game. Because if you buy a Bitcoin today, 27,600, we are going to see some pullbacks. We're going to see some lower prices at some point, and they're going to be better buying opportunities. But if you're thinking long-term, sure, but buying Bitcoin now is totally fine. For myself as a trader, I'm going to wait for lower prices and, either long pullbacks or buy the dips and just put it in to cold storage. So what we can see here is basically Bitcoin has, created, you could say, a very nice inverse head and shoulders pattern. So if we're looking at this inverse head and shoulders pattern, the target for this, if I, do a little bit of TA, you want to take the length of the head from the neckline. So the neckline, let me draw the neckline. The neckline is basically here. All right, so that's the neckline of the inverse head and shoulders. Normally you take the length from the head to the shoulders, you bring that over to the breakout, and we have a sort of target of $38,000. Well, how long that takes, I don't know, but that's usually how inverse head and shoulders work. A couple of other things for us to look at is we do also have Bitcoin in this sort of semi-rising channel, which we end up breaking out of most recently. If I bring it over to the daily, you can see that we broke out of this channel. So for me, where I would like to see Bitcoin come back down to and possibly get a bit of a bounce from is this rising channel, the top part of this rising channel. In regards to the inverse head and shoulders, then my target would obviously be the neckline, which is at 24,300. So those are two long opportunities or buying opportunities that I would look at. Further, where else could we see, obviously, Bitcoin pull back? So we can draw a couple of Fibonacci retracement lines. So the first one is from where we started this secondary rise right here. So the secondary rise, if I just zoom in on the 4 hour, it's probably going to look a little bit easier to see. All right. So the rise of this second leg started here. So we take the height of the local high and the local low, and that gives us obviously some Fibonacci lines. Now, normally in a bull market, you'll tend to see price action come back down to at least the 0.38 and continue. That's obviously quite bullish. And worst case scenario, if we can sort of get a decent, continue the bullishness, you'll tend to see some, pretty good support at the golden pocket. So both of those areas is where I'd be looking at. I want to also find some confluence along with either daily supports or weekly supports. Now, for you guys at home, I've actually drawn these up already for you guys, so we can see that in those two areas that I did mention, we don't really have any local or weekly supports. But that being said, have I created? No, I did not. So we can see that I have not yet updated some of my weekly support and resistance lines. So I'm going to duplicate or clone this weekly. I'm going to put it at the top here. So basically where this candle closed, all right, this latest candle closed, that is now going to be some weekly, that's going to be a weekly resistance line. So I'm going to see we're going to probably see some resistance around $28,000 if we do have a bit of a pullback, and then obviously try and go further up. I did draw, by the looks of it, a support weekly line. So that's support right here, because obviously we pushed up from here, but we haven't yet come back down to test these levels. So if we do come back down around 22,000, I would see that as being some support for us. Alrighty, so moving on. So we drew a, let me go back to the 4-hour. We drew a Fibonacci retracement from this low to this high. And let me just get rid of all those weekly and daily supports, because there's nothing really around the price action that we're looking at. And then I'm going to draw another one from this bottom here. So from 19,500 to the current local high. And what I want to see is, do I see any confluence between the latest fib that I pulled and the current one? So we can kind of see we have the 0.23 and the 0.5 hovering around that sloping trend line that I did speak about before. So we could definitely see if the price comes back down from here, which I think it should, because we've had an amazing push to the upside. I do think that this area is going to be some first part of some support. So will it hold? I don't know. I can't tell you. But definitely when price comes around here, we should see a little bit of a bounce, even if it becomes a lower high. So we have a high, a low, lower high, and a lower low. That's totally possible as well. But I definitely think we have enough confluence to say, yep, we're probably going to get a bit of a bounce here. On top of that, we also had these wicks previously, which were also retested. So I'm pretty confident, because of the two prior price actions that we did see, we should see some support around that 26,000 sort of $200 mark. Alrighty, worst case scenario, if Bitcoin would like to break down and all the money that went into Bitcoin over the last couple of weeks was due to the bank run, then what we can do, we can also draw a Fibonacci retracement from the low at 15,500 to the current high, and we can see obviously that we have a Fibonacci golden pocket, basically where we recently bounced from at 19,500. So that looks like it's going to be some pretty good support. Worst case scenario, if we do dump down $8,000 to $9,000, which the same way that we go up, we can also sometimes come down just as quickly, depending on fear, market conditions, fundamentals, and obviously the news. But this right here, this vertical rise, is not sustainable, and we need to give people that missed this the opportunity to jump back in. And normally, what happens is people that have made a decent profit will actually take money out, and then we see the price reverse. So those are a couple of spots that I am looking at, buying or buy orders, depending on what happens with online volume. You do need to keep an eye on volume to see if there are imbalances between buy orders, sell orders, and also some liquidity. So right now, Bitcoin is looking fantastic for me. I think the price action will continue to the upside, but we're going to need to cool off a little bit. Everything is a little bit overextended. Bollinger Bands are overextended. RSI is overextended. So let me throw in some of my indicators. We can see that the MACD histogram has changed color, which basically means we're going to, we're close to the top, or at least go sideways from here. Stochastic RSI is overbought as well. And now Now the RSI, the just normal RSI, looks like it could also create a bit more, another bearish divergence from these highs. So if we go sideways or down from here, that's going to create a third drive of bearish divergence on the daily. And, whatever does come up, it doesn't stay up for very long. We'll tend to see a retracement at some point. We'll tend to see a retracement at some point. This is probably a bit of an outlier where we went, let's see how many days this was. From when we were here to there, we're looking at 18 days where Bitcoin was basically overbought for 18 days. Currently, Bitcoin has been overbought for 4 days. So we could possibly spend some time up here, but I don't think so because these type of overbought scenarios are quite rare and we don't see them that often. If you look back at the history of Bitcoin, I do believe that actually this was the longest time we stayed in the overbought territory, which when I say overbought, I'm talking about Bitcoin staying above the 80th percentile for a long period of time. So you can see here, this was the cluster of 18 days. And if we look at history, this is probably the next closest, right? And how many days was this? So we're looking at 14 days. And that was back close to the all-time high, right? So from you're looking at $56,000 to about $66,000. So it doesn't last that long. We do need to sort of come back. Obviously, we can have a bit of a grace period up to about 18 days by the looks of it, but I don't expect us to continue this craziness without more people sort of taking profits off the table. I personally have taken some profits off the table after such a huge run. You'd be silly not to. Even if you sell here and even if you buy back, $1,000 lower, like I did today, dollar cost averaged out at 28,200, and then bought some back at 27,200. So it's only $1,000 sort of small scalp, but let's just say 27.2 is the low, then I've kind of made a good decision. I've made back, close to 3% from that trade. So right now is a good time for me to take profit, not financial advice for you guys out there, and then buy back in little increments below, because that's how you can accumulate more Bitcoin whilst you're not leverage trading. If you're not a leverage trader, obviously you're going to be shorting here, but if you're spot buying or selling, for me, this is a great opportunity to sell and then just ladder in a few more buy orders below so you can actually make more Bitcoin. So that's all I wanted to sort of cover, guys. Last couple of things. Obviously, this low right here that we formed back in May last year, that's obviously created a little bit of a the resistance for us. The other thing that's stopping us here, it's also a Fibonacci retracement. It's the 0.236 Fib retracement from all-time high to the local low. You can see 236 right here. And also if I do a fixed range profile of this sideways action that we're in for, how long was this? We're looking at, that was a whole month, so 32 days. You can see that the value area low is around about 28,700. So we may, have one more drive up to that price, and I think we could get a little bit of a rejection from here. But if not, then this is also a really good place for me personally to be taking some profits and buying back a little bit lower. All right, guys, so that is it. My target still for this run up, because we tend to get some really good bear market run ups, is the golden pocket. I've spoken about it continuously in regards to, this being sort of the bear market rally top, and then we'll tend to cool off, come back down and get ready for the halving, which is then the catalyst for the next exponential bull run. One last thing, reason why we stopped here as well, I did speak about it, but it was a little while ago. I'm just bringing this on the BTC1 chart. Sorry. So this is where we ended up sort of stopping. Currently, where we're stopping was the previous large CME gap. I see. If you looked at some of my old streams, you would have seen me draw these rectangles on. It could have been last week, could have been the week before. But whenever I make drawings, I try not to remove them for you guys. But if I just quickly remove this, you can see that we had a huge CME gap, and now that CME gap has been filled. right? We also filled this gap that we formed back on the 13th of Jan with the most recent drop on the 10th of March. So if I remove that, you can see that we had a gap here and we filled that gap. And now currently we do have another gap. So I'm going to remove that because we filled that gap. We have another gap right here. All right, so one that we started forming when we had all the bank run news, and we have a huge gap down here. So why is this huge gap important? Well, as I mentioned before, when I drew the Fibonacci on the other chart, which was the Bybit Perpetuals Exchange, which is slightly different, but let's draw one from here. We can see that we also have a golden pocket down around that $20,000, which is close enough to that CME gap. That'll be, I feel pretty good that sometime in the future, maybe once we hit 50, what we might do. Let's just do this. So Bitcoin price, this is long-term hypothetical price. We could do something like this where we just keep grinding, hit that 50K mark, and then we have a kind of a slow bleed over a few months back down, fill that CME gap. Halving, the next halving, I think, is in May or March next year. So that's about it right there. And then from there, we'll tend to see Bitcoin sort of grind through here, accumulate, and then we'll tend to see the much anticipated and awaited bull market. So guys, tell me what you think. Does my analysis line up with yours? Are you doing any technical analysis? Is there anything that you would like me to cover? I got one comment. Let's check it out. Is it worth doing that 1,000 at a time? I'm assuming you're talking about when I sold at 28.2 and then bought back at 27.2. Well, if you think about it, let's zoom in. Let's zoom in. Is that right, Dave? Are you still watching? Was I on point with what you just mentioned? So let me tell you about my trade this morning. And this was only a spot trade, right? So where are we? Let me do this. Okay, so Bitcoin obviously formed this area. We had a bit of a pullback. Then what I tend to do is I'll tend to draw a Fibonacci retracement from the high to the low, and I look out for the golden pocket or the 786. Now, the push back up, let me go 15 here. The push back up, as we can see, okay, so we made this high, we made this high, came back down. So this is where I draw my fib as soon as I see a change in market structure. And then I'm like, okay, I'm going to look to sell the golden pocket or the 786, depending on what I see on XO charts, which is another program I look at volume. So when we approached here, right, I was like, oh, okay, I can see a bit of a pullback. So I sold Bitcoin right here. So right here, when we hit the golden pocket and we were close to the 786, came down, came back up. I wasn't worried. I'm confident with what I'm doing, and I'm also, dollar cost averaging out, not selling everything and then buying back everything. So the price came back up. Obviously I could have sold a little bit better, but then we came back down here, and then I bought at 27,200. So this drop right here from this candle to here, we're looking at a 3.77%. So if you've got, if you're trading with, let's just say $1,000, you've got $1,000 of Bitcoin up here, which you sell, all right, and then you buy back down here, you're going to make an extra 3% on your Bitcoin, right? So in dollars, you're looking at, you've made $30, but this is unrealized gain because that $1,000 is still going to be $1,000 down here, but you've bought more Bitcoin with it. Now, if Bitcoin tanks, you still made more Bitcoin because you sold here and bought back here, but you didn't obviously buy back lower. You still technically have generated more Bitcoin. And so over the life of Bitcoin, that 0.0009 Bitcoin that you made, because that's what $30 is right now, about 0.0009 of a BTC. You can even check that out. It's actually probably 0.001 of a BTC. Oh, geez, I've really messed up my chart today. Then over time, that 0.001 can be worth, a lot. So I'll just do a quick calculation. Let's go calculator. So 0.001 times, let's just go $100,000 Bitcoin. You're looking at $100 over the course of the next bull market. Okay, doesn't sound like a lot, but that's 10% of your $1,000. So you do that, you do what I just showed you a few times. You're gonna, accumulate more Bitcoin, and if you're making 0.001 Bitcoin every time you trade in and out on $1,000 drops, it adds up over time. You do have to be tactical, and the only time I'm doing this is when I see crazy run-ups, right? So right here, came up here. This is a huge run-up, so of course I'm gonna take some profit here, and then I'll buy back $1,000 lower. So from here, right, $1,000 is here. Oop, just these things. Let me take that off. All right, so we just do $1,000 from here. You're looking at there, right? So you didn't catch the bottom, and there was probably another 1,500 to go, but you've made 0.001 Bitcoin. And then if you do the same here, you repeat the process, you've just made 0.001 Bitcoin twice in the space of a week. So that $100 that I forecast, down the track, if Bitcoin turns out to be $100,000 next bull run, which shouldn't be any problem because we hit 70,000, it all adds up. And I do the inverse, obviously, sometimes when we're in a bear market, right? So in the bear market, when you're cascading down, even though it might not be the ultimate bottom, if it cascades down here and you buy Bitcoin and it comes up and then you sell on $1,000 pump and then you repeat the process every time you do that, you're still accumulating Bitcoin. Maybe over the life of the entire bear market, you're down in funds, but if you've been able to accumulate more Bitcoin, it's a win-win situation for the long term. Hopefully that makes sense, guys. Obviously, I went into a little bit more of some mathematical stuff for you guys. You don't need to be a rocket scientist. And the best thing to do, especially if you're a retail trader, is zoom out. Okay, look at the chart on a daily or weekly scale and go, okay, so Bitcoin, we've just come out of a bear market and we've just gone up $9,000. Is it realistic to think that it's going to continue? I mean, this was probably the craziest run of the last bull market. If you look at this, we went from 20K, or let's go here. Let's go 17,500 to, I guess the major pullback was here. So 34,000. So from 17,000 to here, and I'm going to here because we had obviously that drop, you're looking at 18,000 without any huge sell-offs. So it's very rare for Bitcoin to go up that crazy. And what was that, 103%? This has already been about 45% or whatever. It's very rare in a bear market for Bitcoin to do what it's just done. All right, in a bull market, sure, but this is because we were close to the previous all-time high, and then we broke the previous all-time high of 20K. So if I zoom, we're not going to see it on this one. So if we look at the previous bull market all-time high, where are my things? Here we go. Horizontal rate. Okay, so once we broke that, of course we're going to get a huge exponential run. This is probably like the easiest trade you can take when you're a Bitcoin trader. You can just basically long the farm, break the all-time high, and then we just skyrocketed like 100%. Boom, 120%. But up until the huge sort of pullback was only about 17,000. So Bitcoin now, we've literally just gone up what's that, 44%. Let's just say we went 100% just like last time, 100%. We're looking at, quite possibly Bitcoin could go up to 39K, right, in the next week or two, and then maybe have a pullback. But as a trader, I'm gonna just take the profits when I see a 50% increase, because that's what smart money would do. If you can outperform a hedge fund, then you never need to invest in a hedge fund because they only offer 10 to 15% returns per year. And if you're smart enough and you just use the zoomed out version of a chart, you can be like, okay, so now even better, from the bottom to where we are now, we've gone up 87%. That's pretty good. Bitcoin, trust me, Bitcoin will come back down. It will come back down. So even if you sell here, right, even if you do sell at these current prices, I have 28,000. I can guarantee you Bitcoin is going to come back down to 28,000. Even if it does this, it's going to probably come up and then probably come back down to 28, right? We are coming back to these prices, especially after such a long run up. Now, I personally think we're going to cool off a little bit here. But that being said, I'm also going to take profits when I want, because there's also too much craziness happening with the banks. And even though it's had a positive impact on Bitcoin, this is the first time in a long, well, this is the first time ever that we have seen, a decoupling of Bitcoin to the S&P. Can I log that? No, it's a bit hard because this is the S&P here. So we can see the S&P has kind of gone down the last couple of weeks because of all the bank FUD. And then we can see Bitcoin sort of rising here. I wish I knew how to, I don't always do these auto fit. No, it doesn't work. I'd like to see this graph, over this one, but I'm not very good at that stuff. So basically what I'm saying is, even though the S&P has been going backwards, it's very rare for Bitcoin to decouple from it. We're probably going to see correlation come back at some point. So me personally, as a trader, this is a great opportunity to dollar cost average out of any positions and buy back lower. And even if, as I said, Bitcoin does skyrocket a little bit higher from here, then that's all right. I know it's going to come back down to 28K. We can't just keep going up in a straight line, especially when we've just exited a bear market. Inflation is high, cost of living is high. People who are struggling and have found Bitcoin to be the answer, or crypto to be the answer to outrun inflation or a hedge, they're going to be taking their profits as well, especially if they're struggling to rub 2 cents together. Hopefully, if they're smart, they're going to take these profits and make sure they can feed themselves, pay rent, and all that type of stuff. One last thing, why we're going to find resistance around this area as well, even if it's even if we do go a little bit higher, for example, is we can kind of just see through the last 2 years of trading, we have a lot of action here. So it was support, broke down, and now support becomes resistance. It's just how trading goes. This is totally natural. So if I do a fixed range profile of this entire sideways range, let's go from here. Okay. We have a decent amount of volume. It's not huge volume like here, but we've got a decent amount of volume right about here, right, to support that resistance. So it's gonna be resistance. Like we've just gone up too fast. The other thing is we've just created too many imbalances. So an imbalance occurs when you see 3. Here's a good example. An imbalance occurs when you see 3 candles like this. So 1, 2, 3, and the middle candle is on its own without the first and the third candle being able to touch each other. So here, let me show you an example. So right here, also we have some imbalances, right? So what we tend to see normally is we'll see this candle here come back down here to sort of think of it as a bit of a CME gap. So you tend to never see 3 candles with a big space on that middle candle, price not coming back to that. It's a little bit hard to explain. I might actually just do a video on it at a later date, but an imbalance, you can tend to see it a lot easier on a 1 hour. Like we saw it pretty easily there on the daily, but that disparity of price is too large. I want to show you a bit more of a better indication. So right here, this, let me get my rectangle. So this here, from this price to there, that would be an imbalance because that candle right there hasn't been joined from the candle before and the candle after, right? So this spot right here is an imbalance. So normally what you'll tend to see is price will come back to these imbalances at some point because price shot up too quickly, not giving people enough time to obviously come back to long the asset. So you'll tend to see whenever you have imbalances that we retrace to these, they're a bit like CME gaps. So for example, that's an imbalance right there. Okay, this is what I mean by 3 consecutive ones that don't occur. So we have 1 candle, 2 candles, and you can see the third one here is still in line with the price action of this first one. So there is no imbalance here. There is, however, an imbalance here. So you can see 1 candle, 2 candle, 3. So basically from here to there, we have an imbalance. Now we came close to filling that imbalance, but I like to use these imbalances like CME gaps because we do tend to see price come back to fill these imbalances because these were, quick rises or also sometimes in the inverse, quick sell-off. So here we go. We have a very small imbalance here. And you can see here, look at that, perfect. So the imbalance that we saw here, so we got 1 candle, 2 candle, 3. You can see the imbalance is basically very small. It's from this wick to the wick of the third. So the bottom wick of a candle 1 and the top wick of candle 3, there is an imbalance there. And you can see price came up, filled the imbalance, and then we obviously came back down. So that's an example of imbalances. Because we've had such a big rise over the last week or so, we've created a lot of imbalances. So I could foresee, you know, Bitcoin coming back down, fill up these imbalances, and then price continues to the upside. All right, guys, I do have to jet. Thank you so much for watching my live stream. I'll catch you guys tomorrow. Actually, I'll catch you guys Wednesday. I'm no longer doing the news live streams with Sim. So I'll see you guys Wednesday for the altcoin TA video, and catch you then. Bye.